Hey everyone, welcome back to the Your Money Your Life podcast. We're at episode 341 of the pod. Wherever you're listening, make sure you like, subscribe, five-star rate, and review this podcast. We'll jump right into it because there's actually a lot of news to discuss this week with different things going on. But the first thing we want to discuss is the market. So far, again, we always kind of look at it in a shorter view than a broader view. If you look at it from the shorter view, the past 5 days, we actually have moved down a bit over 1% in the market. Um, the past month, up about 3% roughly. And then the past 6 months, fairly strong. And then year to date, also really strong as well. Biggest themes right now, AI is still playing a theme, inflation playing a theme. We will have earnings coming up for Q3 for most companies, fiscal Q3 coming up. So those will be the biggest themes right now. There's a lot of stuff going on in the news that I actually want to touch on as far as how and why the market is moving the way it is. First thing is that the US Treasury is going to double its debt buyback to steady the bond market. So essentially, the Treasury Department said Wednesday that they will at least double the level of government debt buybacks in the next few months. They're targeting a sensitive, longer duration segment of the market. So yields tumbled following this announcement. So if they're buying back, the yields tumble, price goes up, and this is going to affect potentially mortgage rates and all different type of lending rates as well. So they just said that they wanted to calm the the market, calm the long term yield market, essentially. So with fixed income was under pressure, markets under pressure, yields surging to levels that have not been seen for a while. The yields, meaning the rates on a lot of these debt bond market products were increasing, which was, of course, going to fold into your rates or mortgage rates and other lending rates that you as a consumer will see. And so that pressure was being seen. And so they're actually saying that they're going to target the sensitive, longer duration part of the treasury market by buying back some of this debt. This will increase liquidity, loosen lending practices, and ultimately, you see yields fell, the rates fell, and the price of these bonds will go up. So the Treasury Secretary Scott Bessent said they will target 10 to 20 year and 20 to 30 year portion of the market, which has seen buyers strike since late June. The government will at least double the maximum size of its buyback operations from 2 billion to 4 billion, according to the announcement from the market. And when this announcement came out, the yields and the rates cratered. The benchmark 10-year note closed down 5.7 basis points to 4.6447%. So if you look here at the yield chart, this is the US 10-year Treasury, the bond 10-year Treasury bond yield chart. Over the past 3 months, it's been steadily creeping up, right? We can even go year to date or 1 year. That move has been, the rate has been going up steadily, right? And it has some fluctuations, but it's gone up steadily. Even if you look at a 5 year chart, after we saw the lows when inflation hit, yields go up. So we've seen it kind of elevated for a while. The increase in buyback operation size reflects Treasury's desire to provide greater liquidity support in longer dated nominal sectors where there is consistent strong sponsorship from market participants. So they're again just buying and pretty much going to help try to help quell this market, which is a market that's been going, a bit elevated as far as the longer term bond duration market. In more political news, the administration is actually looking to push a move on the Clarity Act, which is obviously a cryptocurrency structure legislation. They're really trying to say that they want to be the leaders in crypto and Bitcoin and the technology behind the cryptocurrencies. So they're looking to get this legislation pushed. They said it will keep them ahead of China. It'll open the door to the next wave of innovations and innovators. So they hosted events in advance of the new Innovation Advisory Committee meeting for the first time. And they're pretty much this administration saying they want to back crypto. So crypto actually moved pretty steadily on this news in the last 24 hours. If you see here, last 24 hours, that they really took a big jump. There was really more around 69,000, then went up a bit here. And so again, this is not, I don't know if this is the bottom yet, but we are still going to see that bottom in the next, few months. So this might not be the move, but this was Crypto went up, Bitcoin went up on a positive news, but may not be the bottom just yet. We'll keep our eye on that. Let's take a look at more news. We talked about this last week a little bit, but the US national debt reaches that 40 trillion milestone. We talked about the consumer debt last week, but now the US national debt reaches a 40 trillion milestone. It surpassed 40 trillion for the first time. This is according to the Treasury Department data released on Wednesday. The total has more than doubled in less than a decade, driven by a plethora of factors, who we know, including interest costs, heavy borrowing for pandemic recovery, and more recently, tariff refunds and the US Iran war. This milestone comes shortly after the 30 year that we were just talking about. The yield on the 30-year Treasury bond hit a nearly 2 decade high. So they're just saying, like, the lending market is just in shambles. Right, we've borrowed from people borrowed, in the economy for a consumer standpoint. Then, of course, as a country, our treasury has borrowed so much. One, they borrowed for the pandemic recovery and relief portion to give to the consumers, and then, with that said, that the interest rates on that debt due is sky high because of the yields are sky high. So the interest they have to pay on the debt and the borrowing that occurred during the pandemic has interest attached that is incredibly high, right? And so that's just another factor in, like, how the structure of the economy is right now, and if we're on wobbly legs or not. But they did again announce new measures to stabilize the bond market. They're trying to stabilize the market so that the interest rate that they're paying is not so high. And let's take this look at this chart. It's the fixed, it's the U.S. federal debt. It's nearly doubled, as we said, since 2017. 2017 is about 20 trillion, and now we're looking at 40 trillion, above 40 trillion. And so that's just not a great situation if you want to grow our economy. But this chart says it all right now. So that's going to be something to watch, and make sure, if we can balance our US books, it would be incredible. More news. I don't know if you guys heard this, but Moderna soared on the heels of a cancer vaccine breakthrough. So Moderna's shares skyrocketed 177% on Wednesday after its Merck team up on a personalized cancer treatment yielded a breakthrough. It successfully limited the return of melanoma in high risk patients during the late stage trial. So Merck jumped 12%. So in a study involving 1,100 patients who had had their skin cancer surgically removed and individualized treatments, combining Moderna's mRNA technology with Merck's Keytruda immunotherapy, it slowed melanoma's return while also reducing its spread. It's unclear when they will seek the U.S. approval, which will then likely boost Moderna's COVID-19 vaccine sales. Will likely boost both, since the Moderna's COVID-19 vaccine sales have fallen. Um, that's credible. It's like one of the first and biggest breakthroughs when it comes to cancer research. And as you saw, the move by Moderna, you don't really see this very often in a established public company. But let's take a look at this chart for the YouTubers. 176% move. That's crazy. A 1 day move. You don't see that from a company who's a $70 billion market cap company. Look at the move in 1 day. So that's something to look out for. I mean, that means the market just thinks it's an incredible breakthrough. Something that people have been wondering for a while: how do we do with all the information technology? Do we find something that can help with cancer? That's incredible. That's incredible science and technology, and hopefully that are it's able to help people as they go through this process. So we'll keep our eyes on that. It looks like ChatGPT is breaking up with Reddit. So anyone that uses AI or chatbots, ChatGPT is leaving Reddit on red. It says Reddit shares of ChatGPT citations has plummeted to just 0.5% of responses. This is according to Gizmo report. If in case you didn't know, before, a lot of the chatbots, at least ChatGPT specifically, was pulling a lot of its responses from Reddit, but now it seems to be going to more official sites when you are prompting it, um, and actually going to official sites to find the information and no longer just sourcing Reddit. The drop appears to be sudden, with the report showing Reddit appearing in up to 4.5% of all ChatGPT outputs recently as of August 8th. OpenAI has not explained the shift, while Reddit says other studies still rank it highly. So they're saying, hey, we're still in. We want to be still a part of this, but it's actually looking like ChatGPT is actually sourcing more credible information than just Reddit comments. And so that's going to be interesting. You're gonna see these companies clean up things as they IPOs. ChatGPT, OpenAI CFO said that they're looking to actually go public by 2027 early or earlier. So early 2027 or potentially earlier, they said. So maybe in 2026 still. And Anthropic is looking to do the same thing. So we'll keep our eyes on it because they're going to be doing little different things to clean up their act. Did you guys see this? Apple's camera-equipped AirPod raises privacy questions. So Apple watchers are abuzz over a recently unearthed video depicting camera-equipped AirPods, which are on track for a 2027 release. So it'll be AirPod cameras. The visual intelligence feature is raising questions about privacy and may compel workplaces to revisit their policy about wearable tech. And like privacy is becoming a large concern for everyone. You have meta glasses, you have this coming out, you have flock cameras. And so that's going to be a bigger discussion about what can be taped and what not can't be. In public settings, usually people are able to have a video out in public settings. But again, it's going to go tricky. If you work for a place, can you bring those camera equipped AirPods? That's going to be the bigger question. And I don't know. They're probably going to be see a lot of companies put things into place to stop that just for privacy problems and proprietary data processes. So we'll see how that goes going forward. The last story was on LeBron James now being on YouTube, which is pretty cool. That's really really cool actually. Let's actually now step into our questions of the week. Let's see what we got. Questions. There was a few of them. I want to see on a few of them rapid fire and see how much we can do. First one's actually interesting. What percent of adults 21 and older gambled before they turned 21? Interesting. I would say it's like 30%, lower percentage. 65% or nearly two-thirds. That's incredible. I don't think I gambled before 21. Is 21 the age? It's legal age. Gambling is 21. I had no clue. So wow, 65%. I was not a casino. Maybe I did. I don't know. I highly doubt it. Next question. How much do you need to invest monthly to have 1 million when you retire? It depends on the age of the person starting. If they're starting at zero, it's going to be obviously a lot more. Um, so let's see what they say. They're going to probably put 30-year time frame. I'm going to say they're going to say $600 a month or something. 322. Small savings can add up. So in this scenario, they said someone was from 0 to 40 years. They put 322 a month, and they used a future about 8% compounded return to get them to a contribution amount that was only 154,000. But that compounding, which we of course talk about steadily, compounding growth, they use 8%, which is an aggressive growth rate. They use 8% aggressive, but is it aggressive? Because if you look at the last 4 years of the market, it wouldn't be so crazy aggressive. But that's incredible. That's incredible, folks. That is the Your Money Your Life podcast this week. Make sure you tune in every week. Share this with your family and friends. We will talk to you next week.